There we go. So let me share my screen as well. So what we covered last time was about the Keltner channel. And as you know, Kayla here has been doing all the assignments, the optional assignments. So she's been doing a pretty good job. Did you do this one, Keltner channel, by any chance, Kayla?
Yes.
Okay, let me get you to share your screen. Wait, hold on. So you'll be the co-host and you can share your screen. You know what you can do? Instead of, remember what we did last time? You just, can you?
Oh, okay, I'll send it to.
Yeah, to the Discord.
Okay.
It's easier for me to point out.
Yeah. There.
Okay, you sent it. Okay, let me see here.
I'm not really sure with the overrun.
Okay, let's see.
Based on my understanding.
Right. So this is the result. Okay, yeah, this is what this was. Okay, so this is what was the optional assignment was, showing the Keltner channel bands, basically being used as support and resistance and overrun, where it's still, there's no break. We explained that if it doesn't break, it's still an overrun. It can either be a support or resistance, depending on that. And also the outer band. So let's take a look at what you did here. So for example, this one, you're doing it on your right upper outer band resistance. That's good. This one mid band, that is support. It broke off here, came back down, overrun, and it's still connected to the mid band. So that's considered as support. Again, here's more support there. This one, there's an overrun. Now, my question is this overrun? Yes. Is this overrun being used as support or resistance here?
Support.
Okay, so you can leave that support. Okay, that would be resistance. Remember, resistance is on the up, is up.
Upper.
Right. So you saw this break here, disconnected. So it came back here. It overran. It never got disconnected. So it's being used as resistance, the mid band. Yes, that's an overrun. And the overrun is basically the mid band is being used as resistance. The next one you have there. Wait, hold on. I'm just trying to get it. The next one you have here, yes, it broke, like you said, that it broke the mid band. Now, since it broke, it's reset. So this was being used as resistance here. Now what's being used here? The mid band.
Support.
Right, that's support. Every time it breaks, it basically resets. So it continues going up. Now here's what is the mid band being used here?
Support.
Right, support. Dito, what's the outer band being used here? Support or resistance?
Resistance.
Right. So you see the overrun, even though it's not disconnected, it's being used as resistance. Now you come back here, there's more support here. Now we have a disconnect from the mid band. So basically this is really, it just went right through. It never really, like it wasn't there. So that we won't, yeah, this basically is going right through the mid band. Really, there's no resistance whatsoever, no resistance, no support whatsoever, just going up and down. So yeah, this is good. Next one I think you have here is this one. Again, this one, there's resistance. Again, here's support, like you pointed out, that's good. You have an overrun here. Now here, overrun of what? Support or resistance?
The one on top.
This one right here. This is being overrun of what?
Resistance.
No, you remember we're coming from the top. So now this is gonna be support.
Okay, so support.
Yeah. Until we get this one, we disconnected, and here it's medio resistance, right?
Yeah.
Okay, so that basically you have resistance here because you disconnected. So basically it's reset. So now this becomes resistance. Now, yeah, that's a break. This is also a break here. Now this is the mid band here is being used as what?
Support.
Support. How about here?
Support.
Right. Even though there's an overrun, it's an overrun, but it did not disconnect from the mid band. Here it's being used as what? The outer band.
Resistance.
Right, resistance. Okay, so now what you have here now, this basically, okay, so here we have a disconnect, right? What happened? It hit this, went back down. What's being used here? Support or resistance? Resistance?
Resistance.
Right, tama. This one here, support and all that. So this, we have a disconnect. Okay, so here's support. We have an overrun. It breaks, disconnects from the midband. Now here, what's this being used in the midband? Support or resistance?
The one on top.
This one
Or
right
below.
here. Yeah, this one right here. You see, it comes back, comes back.
Still resistance.
Right. Here, it was being used as support. It disconnected. Now it reset. So now it's now being used as resistance. Almost like that. Remember we did that exercise where it breaks the interim area, becomes the support, becomes a resistance, and it's exactly same. I know, same principle. So this is resistance. You're right. That's good. This again is resistance. It broke. There's your break from the midband. What is this? Support or resistance?
Support.
Right. So all this here is all support. Good. See here. So again, there's resistance. That's good. That's resistance. Resistance, we have overrun, so it never really broke. So those are good resistance. Now you have your support down here for the outer band, as well as this. Now you have an overrun. Now there's an overrun. So is this considered support or resistance in the overrun?
Resistance.
Right. Resistance. Ito. Dito.
Resistance.
Right. Here. Dito.
Support.
Right. Ah, very good. Now you see it. Ito, dito.
Support.
Right. Support, support, support. Galing. Yep. Now you understand. Now, if so happens, like for example, if you have something like this, yung ano, tawag dito. Let's say you have this right here, this area right here. You see this? It was being used here as support, right? It broke off, it disconnected from the outer band and came back up. And now what is this being used here?
Resistance.
Right. So this was here support. This is now being used as resistance. It broke again, came back down, and now it's being used as support here. So now you understand every time it disconnects, either the midband or the outer band, it basically resets. Okay. That's the principle, and that's a very important principle when when you guys start trading the strategy, because it determines basically where your immediate momentum is. So with that said, we're gonna go. Very good job, Kale. So we're gonna start talking about the MACD, otherwise known as the moving average convergence divergence. So what we use for the MACD is basically we use it more of momentum as well as direction. If the momentum is strong, as it says here, is the last indicator that we use for momentum. The only indicator that we use to determine momentum are the blue dots. You'll see the dots, also referred to as the Bollinger Bands in their relation to our areas. So when we try to gauge momentum, we use the same principles that we learned about from the market, the vertical movement and spacing, just like we did before regarding the bars, right? How the runs and so forth, how we determine the strength of the momentum. So here are the four different components of the MACD. The zero line. So you'll find a zero line. Let me see if I can find it here. I'm surprised I don't have that. So you have the MACD here. Let me get my. I forgot to get my Ninja Trader. So basically, we look at, you'll see it here. So here, let's look at this one. So this is the MACD. Here's the MACD. Now you see the dots here. That's the BBs. And you see the channel here, this white, right? It's almost like this, the Keltner channel, but this is considered as the Bollinger Band, right? So when you see, and I'll make this bigger so you see the spaces in between, right? That indicates what? Momentum, strong momentum. If it's separated, the farther there's a separation, the distance between the BBs, the stronger the momentum. So the components of the MACD is this. You have the 0 line, which is the middle. You have the plus 30 line and the minus 30 line. What we use that for is basically to also measure momentum, the strength of momentum. So, for example, you see this. You see this where it crosses the basically this is a moving average. So this moving average, the red one in the middle, that's a 26 EMA, while the dots is another moving average, and that's considered as a 12 EMA. So basically, when we cross, for example, for the upper, the upper band to the lower band, basically that's showing here in this particular instance, that's strong momentum to the downside. So we look at this, look what's happening here on the chart, right? Why? There's the strong momentum to the downside, and it continued going down and finally broke. You see this? It kind of bounced up. You have a weak retracement right here, which is basically somewhere here. There's a weak retracement. You can't even see it because it's weak. And then you have another weak retracement, which is right here. That's what it is there. That's weak. And then it continued going down, right? It never crossed over to the other side of the Bollinger Band on this one here. It continued going down and went past below the 0 line. So every time we have the dots below the 0 line, that indicates your direction now is to the downside, as you can see here. Here's the mid band, and now we are below the mid band. So you basically, your direction now is what? A short, or what we call a sell position. So now when we pass this minus 30, that indicates that the strong momentum is where? To the downside. Kita mo yung price talaga, yun ang strong momentum. It's also indicated by the spaces between the dots, as well as we broke the minus 30 line. Every time we break the minus 30 line, that indicates strong momentum to the downside. If we break the plus 30 line, that indicates strong momentum to the upside, just like that, right? So anytime we're above the 0 line, that indicates that's a buy position. So if you look what it says here, it says basically right here, if we're above the 0 line, that means the direction is up, the direction of the momentum, right? If we're below the 0 line, we're basically the direction is down. So the blue dots, or the dots in general, doesn't have to be blue, that is used for momentum. The further apart they are from each other, the stronger the momentum. The steeper the angle, the steeper the angle, the stronger the momentum. And the distance from each Bollinger Band basically indicates strength as well. Distance from the Bollinger Band meaning distance between the dots. And also the distance from the Bollinger Band. Meaning, if you look at this Bollinger Band, like for example right here, we're in the outside of the Bollinger Band. It's spelled right here as well. We're on the bottom of the Bollinger Band, meaning strong momentum. But the thing is, we did not cross the 0 line. So there's really down here, what happened was, look, you have an overrun. It never disconnected from the mid band here. So it continued going up. See that? Perfect trade opportunity there if we're talking about trade setups. But that's what we use the MACD. So again, with the 30 lines, you have the plus 30 and the minus 30. It basically means the strength of the momentum. If we break either one, for example, the plus 30, that means you have strong momentum to the upside. If we break the minus 30, we have strong momentum to the downside. Okay? So we see this typical movements of the BBs that we see in the price action, right? There's the runs and retracements. So for example, if you look at this, you have the run, okay? If I'm looking at this, you have the run right here. Then I can see there's a retracement right here. There's a weak retracement. Run, there's your weak retracement right there. Maybe I bring this down. So you have basically a weak run here. We'll run here to the downside. You have a retrace, which is up there. Continue going down. You have a weak retrace, which is right here. And then you have a strong, even though it doesn't look like it's strong, it's basically, it's more of a, what we call a grindy behavior to the downside. Not really that strong, even though it's indicating there's strong momentum. But anyways, we're still above the plus 30, meaning there's still a lot of momentum left to go to the upside. What happened here, we broke the 0 line, which we broke here, and we also broke the minus 30, meaning there has to be strong momentum, which obviously it started off right there. Then what happened is just basically just started grinding, but had a direction to the downside. But you can see here, if you see the fill line here, it's also flat. So we never discussed what the fill line was. The fill line is basically another way of measuring momentum, and that's more getting into the strategies that we talk about when we trade. So basically, when we talk about the MACD, a lot of people, beginners, the number one indicator that they use is the MACD, because it indicates the direction of the momentum or the trend, right? So this one, for example, what happened is we have strong momentum to the downside. We finally broke the 0 line, so now we're below. And then basically we have a retrace here, which you see here, right? Trying to go to another run, it never really went anywhere because look, it never broke this low here. It just now continued going up, which you have there. And now we're going between the plus 30 and the minus 30. When we have a condition where the Bollinger Band or the Bollingers, the blue dots are just going like a ping pong ball going between the plus 30 and the minus 30, that indicates that the market is in a range or a chop. It's going to go nowhere. And when that happens, I tell my students, don't trade that, because most likely you'll chop out your account in losses. And I think there was an example. See, I don't have my data connected right now. There is an example right here. Look at this. So I'm going to draw this out right here. That would be a good one. Where it was just ranging. It was not really going anywhere right here. Right there, I can see right there. So I had this, and I draw a rectangle here. You see this right here, right? Look at that. It's just going up and down, up, down. And if you see this, it's turning on here, but also here, right here. See this? It's really going nowhere. It's right here. You see this? It's not even going anywhere. It hit this, it broke briefly, but it just went back again, and it's just trading in a range. That's what happens when you go between the plus 30 and minus. Look at this. Really nothing going on there. So I'll find a good one here. Because we're trading in the summer market right now. It's really dead. Look at this one. It's just going up and down, but it broke there several times. But I'll see if I can get a good one. But anyways, when it goes back and forth here between the plus 30 and minus 30, that's when you know it's just ranging. And I don't think I can find another one here, right here. There's a good one. So let's bring this down. Right there. Look at this. The fill line is flat. You can see this basically just going on nowhere. You also have a choppy market that's going, oops. So if I drew that there and I look at what the channel is, how wide this channel is. From here to here, I bet it's less than 4 points. Oh, 4.25. That's still considered a choppy market. We don't ever trade the choppy market like this. Look at this, it's just going up and down here between the plus 30 and minus 30, and that's it. You'll get chopped out. You may have an entry right here, and a lot of people will say, okay, that's a sell. They sell, they don't get the 2 points, it comes back up, and basically they get stopped out, like for example here. You might get an entry, there's really no entry at all. So it's hard to trade when it's a choppy market like that, okay? So that's what Bollinger Bands are used for. Now, The yellow line between, okay, it helps us identify this, how strong. When they talk about the yellow line, they're really talking about the in between. Right now, this is basically a gray line if you see between the dots. It really depends how you want to set that up. So anyways, that's, you see the spaces again, the farther the spacing of the dots, the stronger the momentum. That clear? Any questions on that? Everything good? So now here are the some assignments. 3 examples of market breaking 30 lines to the upside. And since this is the last class, we'll just do this here. So for example, right here, example breaking up from the downside, let's say right here, we see a good one. Let's take one from here where we have good strong momentum right here to the downside here. So basically this started off right here from the top, right? And you have strong momentum, or you see that strong momentum going down, and it continued going down. It broke the minus 30 right here, which is around right here, and continued going down. There's just strong momentum. So if you're gonna look, when we do our trade setups, we usually look at this. This is a great setup right there for a trade that you got at least 2 points, because you would not have been stopped out here. This is basically right here, only 1 point, and you would have gotten our target for beginners is usually what, 2 points. So this is more than that. It's around 4.75. So they've been a great setup. Again, we never crossed the 0 line. However, it told us it's strong momentum. Every time we have strong momentum, it breaks the 30, and it will always pull back to the mid-band, and that's what it did. But when it pulled back to the mid-band here, we're what? We're still below the minus 30 here. So if you look at this, let's say it pulls back there at the mid-band, look where the dots are. It's below the minus 30. That indicates we're still strong momentum to the downside. And what happened? It continued going down right there. Even though we got in here, we didn't get stopped out. It continued going down. You easily got your 2 points. So that's why these are very good in determining if it's a good entry to do a short or a long, depending on the trade setups that we teach you. Again, for example, this one came from the bottom here, went right through, right there. It came from here and right through. You have a pullback here, which you show right here. This one right there, that's a pullback right here. See that slight pullback? That's what that was, and continued going up. We're past broke the plus 30, continued going up. Now it retraces back. It always pulls back to the mid band. That's what happened there. Now, if you look at the pull band or the mid band here, right here, where is your Bollinger Bands, the dots? It's still above the plus 30. It's strong. That indicates strong momentum still to the upside. So meaning you entered here for a long trade, right? Meaning long trade is a buy trade, right? Easy. Look at that. It just kept on going up. Just kept on going up. We're all above all this time. We're above the plus 30, indicating strong momentum to the outside, up to the upside, right? It never broke the 0 line. It was mostly above the plus 30, indicating strong momentum. Look at that. It would have made a lot of points. That's how we use the Bollinger Band, even though it's considered a lagging indicator. We just look at where it is when we're trading. We can do our trade, what we call not a trailing stop, but more of a running, what we call a runner, where we just keep them going up. It's almost like riding. If you're a surfer, it's like riding a wave. You already know that, because why? We're above these moving averages, right? It's basically using this moving average as what? Support. Meaning it's never going to break until it breaks. And where do you see it break? Right here. So now there is a weakening of the momentum, as you can see. And what happens, the weakening of the momentum, you have more of a consolidation going on here, right through this nice and small. Instead of wide, you see there's more of a consolidation going on here. And consolidation is basically, you don't no longer have higher highs, right? You're basically just going off like this. And what happened? Now you have a change of momentum, right? We're now have a change of momentum. We're below the zero line. We broke the minus 30. You have now strong momentum to the downside until it breaks up here. And now you have what we call a ranging market again. Look at this. See this? It's just going between the plus 30, minus 30. So that clear? Any questions on that? On the MACD?
No questions po.
Is that simple? Giancarlo, Joseph.
I'm curious to know what are the light blue bar charts in the MACD. Is that the fourth?
What was this? Can you say that? What was your question?
I was looking at the MACD. I can see this small bar charts in light blue color. Yung ano light blue colored lines, vertical lines, bar charts.
Bar chart. Where's the bar chart in the MACD?
Yung parang toothpick sticking out from the middle line. Yung light blue in color.
Are you talking about the MACD?
Yeah, that one. Yung how do I describe it? Sticking up or down from the center line. Light blue in color.
This one, the oscillator. What is that?
Yeah, what's that?
That's an oscillator, meaning, you know, most likely, if you look in this, that's basically also measures the strength. Oh, look at this. So here, if you look at this, that's an oscillator. So if you look at this, for example, when it crosses the midband here, right? The midband, or basically the 26 EMA, you'll see this. Now you see it crossed over above the zero line. When it does that, and you see the oscillator is used when you see these lines or these bars increasing in height, meaning it's strength and momentum going to the upside. Until you see this, you see where it is now? It peaked there, now it's going to go down. You see it's going down? That's what happens. Now it begins to go down. The momentum to the downside is weak because it never really reached this minus 30 as well. So here, your side, it's below the zero line, but weak momentum to the, basically you can see this. If it reaches up here, that's basically strong momentum to the upside, right? And then what happens from this point on, it started decreasing, as you can see that. I usually don't use that. I just basically, like for example here, that means a strong momentum. Basically, it confirms that you have strong momentum going to the downside. You see this, it's increasing, right, in length from here to here to here to here. So from this point on right here, you have what you call the transition, right? It went from upside, then it became to the downside. You see this right here, what's happening here? It's basically, it didn't go past the midband, just bounced off there. And you see the channel here, it's very narrow. When you have a narrow one like this, it's indicating that it's building up pressure to either gonna burst to the upside or the downside. What did it do? It went all the way to the downside. When you see the narrowing of this channel like here, that's when you know pressure is building up, like what happened here. You know, it's almost like grinding. Now where's it gonna go? It tried to go down, but it didn't. You see, that's when you have divergence. And that's another topic to talk about in some more advanced. So you see this divergence basically right here. You see this going down, right? Oops, wrong one. I have a ray that should be an arrow line. So you see this right here. It's going down, right? But if you see this, what is the price doing? It's really going up. For example, this is what they call, this is how they use the divergence. You see this point right here? Where's a good one? So that right here. So you see these three, you know, if I draw a line here, right here, right here, right here. It's almost like going down, right? But if you look at this peak right here, it's right here. The next peak, which is right here, where is it? It's higher. So if you're looking at this, you look at this divergence. That same thing area is there, is basically going down here. See? So what does that mean? Most likely price will go down, and that's what it did. That's what they call divergence. Same thing. If you look at here, for example, this one right here, you have another divergence here. Draw a line here to the bottom, and to this one, where does it looks like it's about even, right? But that's basically this one right here, and then the next one is this one. Where is it going? Look at the line from here to here. This is basically flat. So what does it mean? It's not going to go down because now this is not going down. It's going up. So it went up. So when you always have this divergence, that's basically there's a potential it's going to go, for example, right here. This one, there's no divergence. You see this top right here. And that's what a lot of people use the MACD. Is basically looking for divergence. So that goes from this top, which is right here, and this top, there's no divergence because it's almost the same thing. From this top right here to this top right there, it's the same. But that's what a lot of people use, a lot of traders use. They're looking for that divergence in the MACD and the price action. That clear? That's more advanced. Any questions? And basically that helps you with the price action. If you can see that if you have the higher highs, higher lows, you know where price will eventually go. For example, right here, you have a low here, then your next high is basically right here. So you can draw a tree from here to here, higher high, higher lows. Again, from there to here. Basically draw a trend line going up. And it's kept going up. You're getting your higher lows, higher highs. Here's your low, here's your low, here's your low, here's your low, it's going up. Same thing with your highs. Here's your high, broke down, swing down again, it's getting higher from here to here to here to here. Again, MACD is it's basically a lagging indicator. It's well known for a lagging indicator, but they use it. A lot of traders use it for looking for divergence. That's what they do. It also indicates, like I said, when we use the MACD, it's basically indicating how strong the momentum is, and that's about it. And when we should be looking for a short or a long, depending if it's above or below the zero line. Any questions? Nope.
I just have one.
Yep.
Yeah. Yeah. Di ba merong 10,000 hour rule na for you to be proficient in something, you have to be at it for like 10,000 hours. So technically, if you're practicing how to play a piano or play a violin, you have to put in 6 hours per day, Monday to Sunday, for 4 years. Is
Okay.
that rule also applicable to futures trading?
No, put it this way, futures trading, those other 10 hours is basically the skill. There's really no psychology involved, right? Trading and whatsoever, you can be trading crypto, you can be trading anything. Any type of trading involves a lot of psychology. You can be great in the technical aspect of it, like you were saying about piano playing. You're great at the technical aspect of it, meaning playing the piano and reading the notes, right? But in trading, you can be great at looking at the chart, being able to analyze the technical aspects of it, but you may be, how can I say this? Your psychology is not there. You have to be able to control your emotion. In playing an instrument, there's really no emotion involved. It's either you play it or you don't play it. In trading, it's you take a valid setup or you don't. And the reason you don't take it is basically you're scared to lose the money, even though it's telling you to take it. It's the psychology. A lot of people, once they lose like 2 in a row, and there's another valid setup that's set up, it's a good valid setup, they don't take it because they think in their head, oh, I already lost 2 in a row. What makes me believe that I'm not going to lose this one? Again, when we trade, it's almost like going to you can basically analyze going to a casino. When you go to a casino, the house has the advantage. When we trade, we have a proven system, or an edge, what we call. We have the edge because we have a high probability system, meaning the valid signals that we trade, or that signals, is basically saying that it's a better than 50% that you're going to win. However, it doesn't guarantee that you're going to win every time. There's a higher probability of winning. So the psychology in that is basically getting over the fear. You have to believe in the system. A lot of people, there's a lot. In fact, I've been like coaching some people here where they submit their trades, and I said, why didn't you take that trade? For example, there was a same guy here. Let me see if I can show one of the students here. Let me see. Right here. Here's a good one right here. He took a trade. Yeah, right. This is the one. So look at this. So we had a valid setup right here. Very good valid setup. I asked him, why did you take that trade? Well, because I lost 2 times right here. So how's that? That's totally different. So he didn't take it here, but he did take it here and got the win. He could have got the bigger win here. He got the same win here too. So I asked him, why didn't you take this? Because I was thinking that I already lost 2 times. I might lose a 3rd time. Oh, no. If that's the case, don't trade the system. You have to believe in the system. That's why we limit our loss. We manage our loss. It doesn't say that our system is going to win every time. First of all, these other trades here was basically more invalid. This was a valid trade. That's a valid trade. Doesn't mean you're going to win every time. Our system is basically the historical thing. The whole historical win rate is usually around 75 to 80%, depending which one. There's the V1, V2, and V3. Most V1s are at least 75 to 80% win rate, but doesn't mean that you're going to win every time. There's always that 20% chance you're going to lose. And if you lose that 20%, just long as you know how to manage your loss, it's good, because you can always get a win. For example, here, a bigger win than your loss. Same thing with here. So that's why the psychology is basically, do not be scared to lose the lose. A lot of people think that, their mentality is basically try to avoid a loss. If it's a valid setup, if you believe, that's the reason we're trading a strategy. If you don't believe in it, why trade it? Right? For example, like I said, I always tell them, the thing is, if you're learning this system, there's going to be losses, because loss is part of trading. The key is to manage your loss, to minimize your loss. Our loss, if we go by what I teach, depending on how volatile the market is, if you have a loss, then okay, I can get it back in 1 or 2 trades. My wins are bigger than my losses. For example, I had some where, I think it was yesterday, I don't think I have it here, it's on my other computer. I was down $750. I was down $750. I'm basically trading 4 contracts. I'm trading a funded account where my daily loss limit is over, I think it's 2,500, one of them. And I think my maximum drawdown is over 3,000. So I know where my loss limits are. I was down as much as 750. I was trading 4 contracts. The next trade I take, it netted me $1,050. So that, I had those 2 losses, which amounted to 750. But I know that if I follow my strategy, I know I can get a bigger win, and that's what happened. In that one trade, the next trade, I made 1,050. It erased my loss. It gave me a net at least $350. I said, okay, that's it for the day. And that's what I'm saying. Don't be scared of losing, because if you believe in the system, you're always going to get it back. I'm not saying the system is not guaranteed. It's not a holy grail, because there are some systems where if you don't recognize that the market is in a range, you'll get chopped out. That's why It's more about seeing the market more. And how do you see the market more is when you practice more, when you do a lot of sim trades, when you see you spend more chart time. It's like you were saying, how many hours? 20 hours you were saying in the piano, right? 20 hours.
10,000 hour rule. So you have to be practicing 6 hours a day,
No,
Monday
no.
to Sunday, for a period of 4 years.
Yeah. No, that's too much. There's a guy who was one of the master traders. He was 61 years old when he first started. It took him 6 weeks to learn the whole system, and he became a full-time trader. He's one of the master traders of Day Trading Academy.
Weeks.
Huh?
Oh,
He learned in 6 weeks.
okay. I took the wrong course in college.
No,
I took the wrong profession. I work for an NGO.
it really, and each individual has their own learning curve. For example, like I said, if you have not traded before, and you basically have no system in your mind, it's easier for me to shape that mind rather than someone like me. When I first started learning this strategy, it took me over a year to really fully comprehend it, because I had another system I was trading.
Oh, okay. So you were following a different system.
Right. And I had to get system completely out of my mind.
And also the old habits.
Right.
Yeah.
So that's why. Go ahead.
Yeah. I'm looking at Ninja Trader because I'm into video editing and computer graphics. The charts, the ticker, the candlesticks, and that,
Right.
it's very similar to the software that I'm dealing with when I'm doing those animations.
Is that right?
Thing. Yeah, it's called Adobe Creative Cloud. So you have Adobe Audition to fix the audio. You're into audio with Victory, so it's for audio cleanup.
Right. So you do that. No, it's totally different, because most of what you see in the bars here is mostly more emotional trading by the traders. It indicates, that's why when we do the 610 chart, it's basically, why do we choose the 610 chart? It's based on the Fibonacci sequence. Fibonacci's are known to be human nature. It occurs in nature. It's the behavior. So
okay, so it's based on Fibonacci, the 1, 1, 2, and
right. Like, for example, the chart that we use, I use several charts, but it's all based on the Fibonacci sequence. The 610 that we use, that I show this I teach the students on, is 610. I also use 987. I also use a 1597, which is basically gives me more of a longer term look. It really, because all trading involves a lot of what we call emotions. A lot of traders there trade out of emotions, and that's what it is. That's why you never see the price go up in a straight line. It's always going to be waves. That's what they call it. They call it waves. And basically that's what it does. And now we have to take advantage of those waves. And that's basically how I trade. If you see the pattern in the ES, especially the market where we trade the ES, that pattern occurs more than numerous times during the day, especially in the morning when you have more high volatility. You'll see that pattern repeat over and over, and that's when you take advantage of it. I always tell my traders, don't trade more than 5 trades, because you'll see the pattern because a lot of people want to try to get in and make a lot of money. And that's not about trading. Trading is about seeing the consistent pattern and taking advantage of it. The money will come. But if your focus is on, okay, I can make this much, I can make this much. No. You have to concentrate on the consistency and seeing that pattern and taking advantage of that pattern, because then the money will come. For example, if I take advantage of a pattern and it gives me, let's say my target is only 200, let's say 8 ticks, that gives me 100. If you're looking at trading one contract, because your account can only allow for you to trade one contract. $100 a day consistently is better than, like I said, if you can win $100 a day 99% of the time as compared to winning $200 60% of the time, what would you rather have?
going for the sure ball. A bird in the hand is worth 2 in the bush.
Right, exactly. So I would go for the smaller, even though it's small, but you're consistently making it. It's almost like compounding interest. That's how you grow your account. And that's how You remember I was talking about the prop firms who are going to fund these traders. They want to see the consistency. They don't care if you make this much money in 2 days, but all of a sudden you can't be consistent and you lost the company. You basically broke the rules of how their stop loss or their loss thing is. They want to see a consistent trader, and they will fund that trader. And that's why they do the test. They evaluate to see, okay, chamba lang ito. Were they able to reach that profit target by luck, or do they have the discipline to be consistent? It's all about consistency, seeing the pattern, and in this case, the strategy that I teach. Each strategy, most strategies are rules based, and if you violate one of the rules, though, you'll see that, oh, I can see why I lost, because either the trader was impatient, because the market is trading in a range and there's no setup. So what they're going to do is going to force a trade. I go, don't do that. It's better to basically sit in your hands and not lose anything than try to force a trade and lose. It's about this whole. That's why that involves all about psychology. That's why most of the people who are most successful traders, you know what, they're mostly engineers.
Engineers, they're not econ graduates, quant mathematicians.
Even in electrical engineers, any type of engineer, because their mind is different.
Yeah.
Anyone who has an analytical mind will succeed, but the thing is, they also have discipline. Engineers have a lot of discipline when they do a lot of things.
Yeah, and it's also a trend right now. Most CEOs, Elon Musk, Jeff Bezos, they are engineers by background.
Right. Yep. So that's why I
took the wrong course in college.
And so here's another thing. That's a fact. Women are better traders than men.
Women.
Yeah.
Okay.
It's a proven fact. It's their mindset. Okay,
Yeah, I'm agreeing with my wife. Yeah, women are better traders. Yeah, she's over there.
Yeah.
Actually, sumama lang ako one time. Yeah.
No, so anyways,
but,
no, Voltaire, yung asawa mo, hindi siya nang nag-trade? Hindi na? Sayang lang yung natuto niya? Or kulang?
He has, I don't know, we're all working from home, so walang time mag-trade. I'm still gonna see if Ninja Trader will work with this laptop. I bought a new one last year.
Okay.
And well, with all the things on the discussion, I think I need to go to day 1 of the class kasi kakapasok ko lang.
Yeah, just look at the recordings there, and if, like I said, a lot of people, here's the fact. I had over 100 students who took the Gold Master class when we were doing on site. A lot of people thought that you can easily make money with trading, but I always said it's more about the psychology. And when they realized that it's a little harder than they thought, they quit. They thought, you just have to follow the technicals, and you just have to understand that. No, it's more than just technicals. You can learn a lot of strategies that are good strategies, but still fail because you aren't really following it. The psychology is not there. It's important to have the psychology. Because they say, okay, like I said, there's a lot of people you can win. Like, for example, if you won a trade that was like 1,050, it took you maybe because you followed this trend and you got $1,000 in less than 30 minutes, you might think, oh, the more I can do this, I'll make more. So you're going to tend to overtrade. So what happens is you lose, you give back some of that profit, and then you said, okay, it's almost like that. If you go to a casino, it's almost that gambler's mentality. If I lose, I had to chase that loss because I was up as much as 1,000. I had to get back that one, at least back up to that 1,000 level again. And they get 3 losses. I said, ay, nako. Anong nangyari sa profit ko? Bumaba. So they'll keep on trying to chase that loss until whatever they won, they gave it all back. Because the thing is, you can't control the market. You can only take what the market is going to give you. Because each, like I said, it may look the same after that. Then after that, it behaves differently. That's why you can't dictate to the market, I'm going to make this much today. Meaning you have control of the market? No. You take what the market is going to give you by looking at, okay, where's my edge right now? What do I see? What is the price action telling me? That's when you start developing your mind and say, okay, this looks like the setup that I always take advantage of. I know I'm going to get at least this many points. I'm going to buy it right here or sell it right here. And usually that's what it's going to give you. And after you get that, like for example, I was down $750. I made this $1,050 trade. I was net. I was up 350. Some people say, well, I'm going to try again. They give up. They give back that 350 win. That's why when you're up like that, you're down as much as 700. You come back with a good trade, and now your net is up profitable. I would have quit right there. Right. So you have to take, because a win is a win, and if you do that consistently, your account will build, and that's what it is. It's not about you play baseball at all. Marunong ka bang baseball?
Basketball.
Basketball. Okay. So let's say,
Fencing.
okay. So baseball, if you notice in the States, they have these home run hitters. They only go for the home run. But if you notice, their on-base percentage or their batting percentage is usually very low because they're always trying to hit a home run. But if you look at these good hitters, they're only going for the singles, just what they call the base hits. It's not the home runs. However, their batting average or their on-base percentage is usually higher. And that's what it's very analogous to what we trade. We can go for small wins, like I said. If you win 99% of the time, you win $50 rather than going for the home run of winning $200 60% of the time. You'd rather go with a $50 wins because it's going to be consistently 99% of the time, almost every time you're going to win. That $50 keeps on building up until you build your account. And that's what it's all about. It's about building your account. It's not trying to hit home runs. So that's what the psychology is all about.
Okay.
Okay.
I see.
I mean,
I guess
hopefully I answered your question about how many hours.
Yeah, because I come from the creative industry. Like I'm into video producing, TV drama for the
Yeah.
700 Club way
Ah,
back.
okay.
So yeah, I've also interviewed testimonies, Christian testimonies of pastors who became traders. Diwa
okay.
Bonigundo, who was Bangko Central's Governor General during that time, he's a Christian.
Right.
They were talking about greed on money. Kasi
Tama.
there are yeah, so yung greed, yung kahit Christian or what. And then I've also interviewed megachurch pastors na hindi sumabit sa sexual immorality,
Yeah.
sumabit sa malversation of funds or
Yeah.
sa greed.
Right.
Ganun. So
So-
it's like the same.
Tama. As like you said, me and you are Christians, or even Joseph here. Mostly everyone here is Christians. Joseph is. I know John Carlo is. John Carlo is also part of Victory. So is Joseph. He's in my Victory group. So, anyways, we know someone can be called a Christian, but it really depends. How do you determine what a Christian is? Is by the fruit. And how do you determine by the fruit? It's where their heart is. For example, you're talking about greed. So basically, their greed is what? It's not it's about the money. Their heart is about the money. It really depends on where your heart is. For me, when I teach students, it's basically sharing the gift that God gave me in terms of how to analyze and look at the market, not on a money standpoint, but more of a consistent basis in terms of, how consistent will you take this trade? How consistent, when you see this pattern, will you take it? It's all about consistency. Once you know the consistent way to do it, the money will come. But like I said, a lot of people or a lot of other courses, they concentrate how much money can you make. They show you the thing about the cars, how many cars they have. They show the mansion. And that's the psychology. That's the psychology that they're building up.
Yeah, like multi-level marketing. Fake it until you make it.
Yeah, exactly.
The system works, but it only works for the top guy.
Yeah, tama. Yeah. So that's why it's all about again, when we talk about, you're talking about the Christians. Yeah, that's right. It's about what you call it. It's about where your heart is. That's the important thing. If you want to have greed, for example, if you're satisfied, remember that being content. If you're content in making $50 or $100, because when we trade, I always tell the people, my students, if you're gonna start trading, you will have to have a trading plan. You cannot trade with no trading plan. It's like going on a trip with no direction, with no map, because you're just gonna want to go where you want to go, right? With a trading plan, you have some discipline saying, okay, if I reach this profit goal or if I reach this profit loss, tigil na ako. And you have to have the discipline to stop. Because it can be addicting to just trade, and trade away. Because that trading is basically, it's almost like a gambler's mentality. There's a fine line between trading and Pastor June De Vierte was talking about this, and he had a post on his Facebook page. Is trading gambling? Is it against the Bible? Well, it depends on where your heart is. If your heart is about money, making money, yes, then it would be considered sinful. Trading would be. But if your heart is where you can have an edge in making money, then that's fine. Because it's almost like the parable of the talents. God gave them the talents, and He told them to multiply those talents. You didn't look at what He did to the one who just buried it because he was scared he's going to lose the money. He got chastised for that. So whatever God puts in your hand, you multiply it, but you do it depending on how your heart is. It's not based on the greed. It's basically how you use that, the talent that He's blessed you with.
Yeah, well, I guess I still have a lot of learning to do because this is my first class that
Yeah.
opened up my schedule. So I
Yeah.
guess I need to go to the.
Yeah. In fact, there's gonna be, like I said, there's the online course. In fact, I'll get back to you with that, because if you want to really look at the setups, I'm gonna see this is no longer called Day Trading Academy. It's my company now. It's called Day Trade Asia. So I have a team behind me right now, and I just do the teaching. Somebody else does the operations, and the guy who's helping me with the operations, he's from Victory Parañaque. So he's also Christian. So we're all the ones involved in this now in my organization, this school, all Christians. So,
Okay. Are you gonna have another free online session like this? So I can.
I'm gonna discuss that with him. We'll see. I think there's gonna be one, but it's gonna be less in scope, because he said, you know what, the thing is, if we give everything for free, a lot of people will not find value in it. For example, I've noticed that if I give a course for free, a lot of people will not take it seriously. You know why? Because there's no skin in the game for them. They'll just say, "Oh, libre naman to. What am I investing here? What am I going to lose if I don't take the course, even though it's given to me for free?" Wala investments, because hey, there's nothing to lose for them. So they have to have some skin in the game. I've learned that. I've given my teachings for free, but were they ever serious in taking the course? No. Like, for example, for the students who were able to afford the 50,000 pesos, they didn't take it seriously, because that 50,000 really is basically telling me 50,000 is okay to lose. Because, for example, if I price this course to be, let's say, around $5,000, I paid, when I learned this, it cost me 5,000. That forced me to really learn, rather than say, "Oy, okay lang, sobrang hirap naman to. Okay lang, 5,000 I just threw away $5,000. Pwede na yun, because I make around 50,000. I make $150,000 a year. 50,000, okay na yun." That's why I'm saying it really depends on how much skin you have in the game. If people can afford to lose 50,000 pesos, okay lang. They won't take the serious, because they say, "Oh, sobrang hirap naman to. Why would I put the effort? 50,000 to me is really nothing to me. That's why I can throw it away." That's why it really depends on what the skin is. It's all about how much value you find this. If, for example, you can find this truthfully, if you give something for free, people will devalue that because it's really nothing to them to not even do it.
Yeah, because I'm thinking I have a cousin. He teaches in UP. He
Mhm.
goes to Victory, Baguio.
Yeah.
Yeah, he's a teacher, so he's more interested in this sort of trading, futures trading. So is it okay if I send an invite
Yeah,
to him?
Yeah, send them. You know what? Send them the links to the free courses that you'll see on YouTube, and he can if that somehow piques his interest, then let him know. In fact, my operations manager, he's already putting up a new price thing that's going to be very good, not only for professionals but also for students. We're also concentrating more of the younger generation. Kasi alam ko, we are also there's a lot of people who are losing jobs, young people who are losing jobs, even though they're college graduates, right? Mahirap sila magkuha ng trabaho, so they have to learn a new skill. So why not learn a new skill? It's basically being like an online business for them. But there's really they don't have to shell out 100,000 pesos to do an online business.
Yeah, my cousin, he's a student. Napansin din niya pag student puro online.
Yeah.
Sometimes natitigil yung classes nila kasi walang pambayad sa tuition.
Tama.
Like yung we work with LaSalle Benilde, CSB.
Yeah.
IJM is a part of College of St. Benilde. CSB people were telling us na hindi na muna siya mag-volunteer sa amin because enrollment is down.
Tama. That's right. Because and they say, okay, why am I gonna get a degree when I can't even get a job? It's like a piece of paper, it's just a piece of paper because most companies are gonna hire you because you have to have experience. It's not, the paper will be good, but do you have experience to back that paper?
Actually, companies right now, they're looking for a fresh grad with 5 years experience.
Oh, ito. 5 years. Wow. Where are you gonna get the experience in 5 years?
Yeah, yun yung joke. Kasi yung pinag-aralan mo ng college ka, pagpasok mo sa job market, the skills are no longer relevant.
Yeah.
Like right now, everything's computerized.
Yeah, exactly. Yeah. So everything's all digital age right now. In fact, are you good with IT? Are you interested in IT?
IT?
Yeah.
Tech. I don't even consider myself a techie, but pag mga setup, mga ganon, I'm more of into video editing, computer graphics.
Okay.
The thing I do for IJM is media relations.
Okay.
So I've done a few commercials online and when I was working with CB.
Okay. Good. So anyways, I have another coaching session, but anyways, you have any questions, let me know. Join my Discord because you can throw all the questions there on my Discord channel, Voltaire, and also have your wife also join my Discord. She may have some questions also. Other than that, I gave you the link to my YouTube channel where it has all the recorded the free sessions that I just did. If you need to go over that, it's all there.
I'll scroll through that. Kaka-join ko lang, kaka-subscribe ko lang kanina.
Yeah.
And I think pag umabot ka ng 1 million views, you can monetize on those classes already in YouTube.
But I don't my goal is not to monetize. It's just bring around there for information.
Oh, so I can share those links.
Go ahead and share.
Kasi he's into different he's trying to get into crypto. I'm talking about it.
No, but crypto is like that's great. Well, that can be good, but a lot of people look for how much money you can make, and it's all about greed. Look what's going on.
Yeah.
A lot of people are losing money in there because they bought high rather than sell high and buy low. So anyways, I hope you guys enjoyed it. So if you have any questions, join my ask questions in the group. And Kale, I should say. Let me see. You've been doing good. Maybe you might be interested in learning more.
Yeah, I was about to ask if what's the next step to this.
Yeah. In fact, let me. I'll email you. Can you provide your email? Meron kang pang email?
Yeah, I can send you.
Yeah, send me directly either sa
Discord.
sa Discord directly to me. Okay, not on the chat room, but directly to me. Okay,
Okay.
because I know my organizer or my what I say, my operating CEO, he's working on a price plan for students as well. So, okay. Okay.
All right.
Okay. So Joseph, okay ka na? John Carl, are you okay?
Yes, po, Sir
Okay.
Dom.
Okay.
Yeah.
So
Yeah.
hope you guys enjoyed it. And like I said, enjoy the rest of the evening. And Voltaire, thank you for coming on. View the links to the other videos, and I'll talk to you guys soon, hopefully. Okay. Bye bye.
Thank you so much.
Thank you.
Thank you so
Thank
much.
you.